Hey guys, Mike here. So, oh boy, what a red day in the market, and it looks like we finally broke that streak. And if you wonder what I'm talking about, I will tell you because it was in a video 2 days ago when I said we're setting up for a big move, and here's why. And so I'll show you that as well as something we talked about yesterday, right? When I've been listening to the gentleman who runs a volatility index talk about what happens in September when you got OPEX and quad witching and all these options expiring and things like that, and the flows and all that good stuff, and what we're setting up for, as well as some of the charts and stuff, because some of the stocks finally made the move that we've been waiting on them to decide, right? And so when you look at this right here, you know, I did this a couple days ago, so the large move is setting up with this little graph right here, and the reason why I said that was this right here. And look at this, the S&P has gone 94 trading days or 3 months without a drop of at least 1.5%. You have not seen this happen. There's the line right there you want to get below, right? Of 1.5%. You have not seen this happen since 2018. It's been almost 5 years. Are you kidding me? And I went on to say the reason why is because you got this Magnificent 7. I'm going to add 2 more in here with Google and Amazon. So the Magnificent 9 that is just holding up the market, right? So when they're green or flat, it doesn't matter what everything else does because they make up, which I'll show you, almost 30% of the S&P right here. But you can see when they all go red, bad things happen. You have these big moves down, and we finally got that 1.5% and greater move down today on the index, and you can see why. This is the SPY. All right, for those who have never seen this before, you can see what it's making up. Now, I've taught you about Eli Lilly, right? It's almost 100% up on the year alone. It's just been this crazy mover, right? Straight up, moving like a tech stock. Why does it really not matter? Because when we scroll back up here and look, Apple has a weight almost 4 times out of Eli Lilly. Microsoft almost 4 times. Amazon almost 3 times. NVIDIA almost 3 times. So, you know, you just look at that and it's like, great, Eli Lilly can be just crushing it along with a bunch of other stocks, but they just don't have the weights when, you know, basically 9 stocks make up almost 1/3 of an index, okay? And this is why I tell the members every morning we talk about breadth, right? The rest of the market moving up. And once again, if you take those stocks out, the S&P is almost dang near flat for the year, which would make sense, right? Because again, and I talked about in that video, which it's amazing to see that we hadn't moved down 1.5% in 96 days. When you're talking about the interest rates we're dealing with, all this other stuff is happening, and there's a little lack of breadth that we've had, but it's just because of those stocks, right? And so if you finally see those stocks start to show weakness, like Apple has been showing weakness, and we'll go into that chart in a minute. Netflix has been showing weakness. And so when you see that, and you start going hand in hand, because what else has happened? You've had Tesla moving up, Google's moving up, money rotating into Amazon as well. So they're pushing up while these others are starting to show weakness, and they're just, the weights are so great, you can't get a 1.5% move down. Or you've had oil pushing up, so oil stocks started going. But today, you finally had just a sea of red. It was crazy what was green, by the way. And somebody explained to me like I am a 3-year-old. I asked the members. Nobody seems to know the answer. You know, this right here, the UAW strike happened, started at midnight last night, right? So that affects GM, Ford, and Chrysler, or Stellar, whatever they call it. But look at this. The 3 that it affects, who have union workers, the stocks are all green in a bloodbath of red today. Tesla I expected to move down because the whole market moved down. But somebody explained to me, how are these green when even in the best case scenario, they're going to have to pay their workers more money, which they're already having trouble with margins to begin with. And right now, a lot of their plants are going to be shut down. So please, somebody in the comments, break it down for me. Whoever's an auto expert on these stocks, why in the world are these green? That's all I really want to know right here. Now let's get into a little more about why the markets went bloodbath red today, and why. Let's make a little more sense of it here and what we can see going forward. And guys, if you get anything out of this, please hit that like button. It helps people find this video. And if you like the content, think about hitting that subscribe button down in the bottom. And it starts with that interview I showed you guys yesterday. Again, I'll link the video at the end if you didn't see it from yesterday, so you can watch it. But the interview with Cam Carson, who runs the Volatility Index. And what did he say in that interview right there?
The last 2 weeks of SEP represent this window of weakness after the SEP OPEX, right? Okay. After these flows push up, that's still there.
And you can see this is the seasonality right here. We talked about the S&P, where usually you actually get a push up, but this is, we're probably right here. So you might see a move up, but still you see a weakness in those last days of September right here, about the last 2 weeks. That's normal seasonality. Will we continue to do that? We don't know. And this is where Tom Lee's, call was so against the trend, right? So if he's right, it's a huge call. If he's wrong, then nobody should be shocked because, again, he's going against the trend. He's saying the beginning of September is going to be front loaded with red. The back end is going to be that way. And you can kind of see we hadn't really had a push up in September yet, right? So we'll see if he's correct. But this is what Cam Carson's talking about with that seasonality weakness and that trapdoor he talked about when it comes to the flows and everything. So today, hey, remember, put it in your calendars from here on out, right? September OPEX is a big OPEX. Why? Because we're going to strong seasonality, things of that nature is happening. And so again, I'll put that video at the end if you want to watch that. But it's something to remember going forward, okay? And so we kind of had the same thing happen last September, if you remember. And so a couple things to watch out for going forward, whether it's going to be in the next 2 weeks or at least the next 3 months is what I'm looking at. I'm kind of panning out here. It's going to be, one, what are companies doing with stock buybacks? And also, is money going to start continue to move out of this market? And you can see on this chart when it comes to stock buybacks, they fell from $215 billion to $174 billion in the second quarter, down 38% from 2022's first quarter peak right there. But again, this is really insulated to the top 20 companies. The top 20 companies make up, you know how much? 52% of stock buybacks, which that would be who? Apple, Microsoft, Google, all of these companies, okay? Now, another thing we got to pay attention to going forward, people just keep taking money out of the Chinese stocks, rolling them to wherever, whether it be money markets, American stocks, treasuries, but they sure don't seem to want to be going in Chinese stocks. We got to see if this continues to be the case, or do they finally feel like, okay, China's, bottomed out, let's go ahead and start putting money into it to drive up. Because if it don't go into Chinese stocks, it's got to go somewhere. And it's either going to treasuries, money markets, or it's coming over here to our stock market, okay? So keep that in mind. And again, that means I'll track that for you. Now, when it comes to the indexes, and again, I'll have some bigger charts or long-term charts on Sunday here to look at this. But looking at the indexes quickly, you can see on the short-term trend lines, will we come down and meet this and bounce? That's what we got to figure out. Right now, we're kind of in that volume gap, wedging here. Do we keep wedging, maybe fill the gap and bounce, or do we head back down? That's what I'm looking for on SPY right here. And you're seeing this in a lot of stocks too, where they're just in these wedging patterns and narrowing themselves down like you saw AMD do for a long time. And we'll absolutely talk about that one today as it finally made its move. But this is something we just got to see because at that same area right there, you have the 50 moving average along with what will be resistance now. So that's what we got to see if we can reclaim the 50. Again, looking out on the bigger pattern here, you can see that's the long-term trend line. We've had 3 bounces on it, so we'll see if it breaks that short-term trend line, whether or not it's going to come down, catch support, and then bounce from there. That would be a nice little drop down to like 430, 431, somewhere in there. So keep that in mind. And then when it comes to the Qs, you can see we're talking about this rising wedge here. I said it was right there at the top. I said, let's see if we get a bounce, come down, bounce right here. But instead, it fell straight through, down like almost 1.8%. So it absolutely got crushed. You can see down there at the bottom right here, I'm not going to detail what this is. This is something some of the members now talk about. There's a 1 hour fair gap below that, which actually tends to correlate right there with that long-term trend line. And if I zoom out right here, you can see it a little more clearly that trend line has been in place since it looks like March. Now we've had 3 bounces off of it. So, if we continue to hit weakness, do we come down and test that trend line, right? Which should also coincide with that fair value gap right there, which would make perfect sense, but we'll have to see on that. Now, IWM, again, hot mess on this one. It's sitting right there on the anchor VWAP, 200 moving average. It doesn't want to give up. It's like 180, 250 is really where you don't want to break right there. But again, it keeps set there and it can't really catch that bid. You think it's going to start to take off and it does not. So the head and shoulders is still in play on this one. Now, AMD finally made its move. Here's this trend line we've been waiting on. It's got 5 bounces off of it. Hadn't been below it this year at all. And then finally, big breakdown, almost 5% of the day at one point in time. As you can see, I told you if we break it, we're going to 102. Actually, we end up going like 101.60, I believe, was the number it actually hit. If we pull up the moving averages, if it continues to sell down, you're going to see 97. Where does 97 coincide? With the other trend line, the 200 moving average will be sitting there as well. So that'll be a nice bunch of confluence. We'll have to see if the weakness continues next week or it gets a bounce. Now, Apple, they're defending that like 174 area with their life right now because they know if they break down below that, it's going to end up filling this gap. You're going to have support. You're going to have a 200 moving average, which Apple loves to bounce off of. So you're looking at a lot of confluence right there at that level if it breaks. Again, if the weakness continues, we will see. That's a lot of confluence. Same thing I talked about with Tesla when it did its bounce. Same thing with Apple. And I'll go into Saturday's video a little more about Apple as well if you want to pay attention to that one. Now, because a lot of you guys had comments about Apple and everything. So Tesla, very simple here with Tesla. I didn't, the fact it went red, slightly red, didn't, surprise me or whatever because the market was red. But again, you look at that trend line right there. We bounced off of it a few times, so we do fall below that. Don't be surprised because this push up, you see it go between 155, 163, somewhere in there, and start to actually, fill that gap and stuff. We continue this weakness down before you see a bounce back up and before it starts heading higher, because it will absolutely fall in that volume gap, and you see how fast it moves down, just like it moves up. Again, we'll watch the volume flow as far as the options are concerned and any news events to push this one in the direction it's going to go. But right now, it's still in that uptrend. Now, lastly, when it comes to where the sector's money is flowing into, you can see what's weird about this, and you got to pay close attention to this, is utilities, right? You look at 5-day this week, a lot of push up in utilities. It was the winner. Even people put in money going into financials, which kind of surprised me a little bit, but the utilities are the big one. But then when we go to the monthly, you can see energy still on top, but who's second? Utilities, right? And so when you look at that, you start to say, okay, well, where's the XLV? Healthcare, due defensive, XLV, nope, they're not going there. When I'm sitting there going, okay, let's go with consumer staples. Don't see that one winning either, but they are flowing into utilities. And I'm not sure if they're just trying to get in early or just playing defensive, right? Because normally mid-October into December, seasonality-wise, is really strong for utilities. So maybe they're just loading up now, getting in early, or they're just trying to be more defensive right now. So, I mean, that's really what we got to look at and stuff. Again, if you play utilities and you're big into that, let us know what you're looking at least from like October, November, and December. Okay, so that's what we got to keep in mind. Again, tomorrow's video, I'll go over you guys' comments and questions and stuff. A lot of questions about Apple and some other things here, which we'll delve into, oil, things like that. But then Sunday, I'll set it up with really more long-term charts, right? Because, you get a day like today, people panic, oh my God, we're going down 5,000 points or some crazy mess. And maybe that's the case. Maybe the trapdoor has opened up. You see weakness and we go down, right? So maybe that happens. We'll see if it continues. Again, we're in September, right? I don't do those videos for my health when I show you what September and what was August supposed to be like and what was September supposed to be like. They're crappy months. They're volatile months, right? And so I don't say that just to be saying it. It's true, right? And so, let's not be surprised, but we're going to look at some more longer-term charts to see what exactly is going on. Because don't forget, what are we in? Still in an uptrend on 2 of the indexes, or actually the Dow is too. Obviously, small caps is a whole different ball game, which I'll talk more about that tomorrow as well. And so anyway, let me know what you guys thought about today. Obviously, it was a sea of red, and it was just funny to me what was green. When I saw like travel was green, I was like, what? Travel is green. Okay, the cars dealerships or the car companies are green. I'm like, okay, very interesting day to say the least. So, also look at what was also green. I don't know if it was still by the end of the day, but through lunch, Disney and PayPal were green, right? The ones that have been beaten down. Like, pay attention to those kind of stocks in days like today, because that lets you know where big money is actually putting their money. So just keep an eye on that. So anyway, hit the like and subscribe button, guys. If you got anything out of it, I always appreciate it. And I'll see you tomorrow.